Well, meanwhile, billionaire Warren Buffett has released his annual letter to shareholders with Berkshire Hathaway's earnings over the weekend. For more, we're joined by Nathan Bell from Peters McGregor, who joins us from our Sydney CBD studio. Nathan, hello to you. Certainly always intriguing when we do get that letter from Warren Buffett, publishing this letter to Berkshire Hathaway shareholders over the weekend. What was the key takeaway to your mind?
Excuse me, my favourite part was there was a bet that Warren Buffett made about 9 years ago, and the bet was with a fund-of-fund manager. So this is a guy whose business invests in other hedge funds, and the bet was essentially that Buffett thought just a pure plain index fund would outperform this group of 5 hedge funds that this guy selected. This is remembering that the hedge funds charge very high fees, then also the fund-of-fund manager charges a level of fees on top of that. And it's 9 years down now, the bet. There's only 12 months to go. And the index fund is just absolutely miles ahead. So the charity that Buffett selected is going to have a win. But it's just amazing. It's not just poor performance from the hedge funds, which was a huge part of it. But when you layer on these massive fees on top of it, you really, as an investor, have no chance of beating the index. And the hedge fund industry is so competitive these days. It just shows you that very few people out there, particularly managing large amounts of money, can beat the index over time.
Well, certainly we know Mr. Buffett a fan of finding those opportunities where others perhaps don't see it. And in fact, Buffett's business partner, Charlie Munger, recently commented on Buffett's recent investments in the likes of Apple, also US airlines. Are these opportunities for the broader investment community?
Yeah, I mean, Buffett's really gone against what he's been saying for decades in terms of the airlines. It's a much more consolidated sector. Pricing seems to be rational, but we've been talking about it in the office as a potential investment, and just as soon as we did, there was announcements by a couple of airlines that they were cutting fares. And this is what you're really afraid of with airlines, is just that they'll take on new routes, and there's just a lot more competition for prices, and it just completely smashes earnings, yet alone the impact that higher oil prices might have, or the fact that you have to invest billions in a new fleet. So we haven't invested in the airlines. Apple's probably more interesting. You've got very sticky customers. And it was interesting, Charlie Munger said that just how competitive the business world is today compared to 20 or 30 years ago when Buffett and Munger were much younger. So there's a lot more opportunities back then. And you're now competing against hedge funds and all sorts of investors. So they feel like they've got a small edge in Apple and the airlines, but these are no laydowns compared to some of the investments they used to make.
Munger also explained why investors might in fact do a lot better in China than in India, given that India is being flagged as this huge growth opportunity and perhaps even overtaking China in that respect. What's your view? Yeah,
Munger really slammed the framework that India operates on and just said the Chinese, they really get things done. We've got a couple of investments in China. We own the Google of China and the Amazon of China. We think they're going to be wonderful investments. We are worried about the short term in terms of the macroeconomic environment in China and slowing in fixed asset investment. We've hedged the currency. But it was really interesting that Munger said China, they really get things done, but also that he thought there was a lot of cheap companies in the country. And it's just interesting, people are very, I guess mixed these days. There was a lot of fear about China 12 months ago. That fear seems to have evaporated. But you've got some absolutely wonderful business that most people in Australia have never really heard of. They actually have some wonderful national champions in what I'd say modern-day technology sectors. So this isn't building apartments that aren't needed, but Tencent, which has WeChat, this wonderful messaging service that offers all sorts of other services that people are locked into. These businesses are going to grow for a long time, so we think it's a really prospective area.
Now, I wanted to discuss with you the ISE Wealth Index. Now, over the past 7 years, Nathan, the ISE Wealth Index, which is managed by fund manager Horizon Kinetics, which tracks companies managed by wealthy individuals with large ownership stakes, such as Warren Buffett, has in fact outperformed the comparable world index. That's by more than 6%. Is sort of large insider ownership a reliable predictor of outperformance in your view?
Yeah, that 6% is an annualised figure, so over 7 years you can imagine how much that means to investors. Large insider ownership is really important to us, and probably half to 3/4 of the stocks in our portfolio do have managers with large amounts of their own wealth on the line. If you think about someone who buys a car, and if that was the only car you're ever going to have in your life, you'd really take care of it. So you just don't see these types of managers doing dumb things like making overpriced acquisitions at the top of the cycle. They run really clean balance sheets. And they're just really very entrepreneurial. They don't have to go through a bureaucracy to make an important change in the business strategy. So we think it's one of those few reliable indicators that continues to be something that you can invest on, regardless of the reducing barriers in business coming from technology. If you've got a good management team, they can actually adapt in a way that, say, a central bank can't. They've really only got one lever to affect the economy, which is interest rates. Businesses are dynamic, but you need a dynamic leader who doesn't get caught up in bureaucracy. So although it's only 7 years that we're talking about in that those particular numbers, there's lots of research that shows the benefits of large insider ownership, so it's really key for us.
Nathan Bell, pleasure to have you with us. Thank you so much for your time today.
Thanks, Natalie.